Welcome back, everybody. Doug Burson here, and I've gotten quite a few questions over the last couple of weeks on how quickly I have to take my money out of the IRA I just inherited. And there's a lot of confusion because since the Secure Act was passed in 2020, there's been this concept of a 10-year rule, and that's what we're going to discuss today is how that works. And so what's occurred is the rule had a lot of confusion related to it. And so the IRS has kept kicking it down the road. They just kept saying, we're not going to do anything with it. We're not going to do anything with it. We're not going to rule. Well, this year they did. They just did that this summer. And so now we have rules on how this has to work. For those of you who maybe inherited an IRA 2000, 2001, 2002, don't worry about it. You've got a waiver on penalties there. But going forward, effective 2025, we have to start following this new 10-year rule. Who does this apply to? Well, this applies to non-spouses as a general rule. There are exceptions to that, but for today we're going to talk about non-spousal beneficiaries, which basically means you inherited money from your mom, your dad, your grandma, your aunt, your uncle, someone like that. And so you've inherited this IRA, and they were already old enough that they were taking distributions. What the IRS has said is, look, if they were already starting to take money out, you have to as well. And you also have to make sure you get all the money out of this IRA within a 10-year period. The question was, and the confusion was, do I have to take money out every year? Or can I wait till the end? And this new ruling handles that. What they've said is that you have to take money out every year effective in 2025. But what you get to do is you get to use, in most cases, your life expectancy. So, for example, if you're 25 and grandma was 80, you're going to live a lot longer. So that means you can take out a smaller amount each year and still fulfill the requirements. Now, rely on your financial advisor and your tax preparers and the people managing your IRA to worry about what table to use because you can get confused on all that. They can handle that part for you, so don't get bogged down in all of that jazz. They'll handle that. The important part is you don't have to take as much out as, say, grandma was because you're younger. However, that may not be the best choice. And the reason is if you take out a little bit each year, when you get to year 10, it all has to come out. What does that mean? That means you could trigger a big taxable gain, or income actually, a big income in that final year and cause yourself to be in a much higher tax bracket. So just because you can let it stay in there doesn't necessarily mean you should, and I would highly recommend you talk with your tax professional if you're in this situation to plan out what makes the best sense for you. Take advantage of the tax brackets there to try to lower the overall tax. However, if maybe you're a little bit older and you've inherited money from mom, for instance, and you're going to be retiring in 3 years and your income's going to go down a lot, maybe we should hold off and take just the minimum that we can for those first few years, knowing that in 3 or 4 years I'm going to be in a much lower tax bracket. And so now this is where we can start to see there's some really good tax planning strategies here that we need to be thinking about. And so that's what I want you guys to understand is just because you can take it out slower doesn't mean you should. But the rules are definitive now. You have to take some out. As long as the situations we've been talking about, you have to take some out every single year based on the life expectancy tables. So that should clear that up for a lot of you. If you have any further questions, drop them down below. We can get into the details. There's a lot of stuff here that can trip you up. So this is just to kind of give you some highlights. I totally would recommend that you talk to your financial advisor and your tax person to make sure you're on the right path here. But I want you to know what's going on. Now, what about a Roth? You know, Roth IRAs are different. And how does that work out? Well, it is different because remember at the beginning we talked about the RBD, the required beginning date. And if there is a required beginning date, that means we then have to start taking out money on a regular schedule. But guess what? With a Roth, there is no required beginning date. So that changes things. However, the 10-year rule still exists. So what this means, to put it simple, if you inherit a Roth, you don't have to take the money out as long as it fits all the other things we've been talking about. You don't have to take that money out until the last year of the 10 years. Should you? Once again, this is where tax planning comes in. The truth is, for a lot of people, you're going to be better off leaving it all the way there, because once you take it out of that Roth, it's now going to be in a regular account. Guess what happens in a regular account? Your gains are going to get taxed, right? And so it makes a lot of sense, if possible, to maybe let this thing stay in the Roth all the way till the end, continue to grow tax-free so that those gains don't have that tax drag on them. And then when we have to, we can take it out then, because still, remember, it's not going to cause tax on your income tax return when you take it out, because it's a Roth. And so that will be a tax-free distribution. But if you take it out early, like I said, there's going to be tax drag on those gains. So there's some stuff on the new Roth rules. We can get into some more details there. There's stuff with spouses, with a lot of other little tricks and tips and things like that we can cover maybe in another video. But I just wanted to bring you the basics. How does this affect the average person? And that's what I wanted to talk about today. If you're in a situation like this, make sure you go talk to a professional and get in the actual details, because everybody's situation is different. That should take care of it, and have a wonderful rest of your day.